Okay, here's a thought. What if I told you a handbag, maybe a wristwatch, could actually consistently outperform the stock market? Sounds a bit out there, doesn't it?
Yeah.
But here at the Urban Herald, our team's been digging into this pretty radical shift, how luxury collectibles are becoming genuine portfolio assets. We're really bridging these worlds: high fashion, horology, that's watches for anyone wondering, and high finance. It's a fascinating mix.
It really is. And for this deep dive, we're going to explore just how these things, these objects once seen as just accessories, are now hitting record prices and offering, significant investment returns, often better than traditional markets.
Right.
We'll really look at the forces driving this change and what it actually means for you if you're curious about where real value sits in today's economy.
Okay, let's dive in. There's this one event, this wake-up call that just completely shattered expectations. We're talking about Jane Birkin's own prototype Hermès Birkin bag.
Ah, yes, that specific bag. It was well worn, clearly used, but it sold for an absolutely astounding $7 million hammer price, which came out to $10 million total with all the fees. That was back in July 2025.
10 million euros.
Yeah.
For a handbag.
Exactly. And the really remarkable thing isn't just the price tag. It's that this one sale didn't just nudge the record higher. It absolutely shattered previous handbag records by like 20-fold.
20 times. Wow.
Yeah, it wasn't just a high price. It
That's-
felt like the moment handbags really, truly crossed over from accessory to legitimate asset class.
So the takeaway isn't just expensive bag. It sounds like the equation is something like scarcity plus a really good story equals mind-blowing value. Is that kind of the core idea now?
That's a great way to put it, precisely. And for Jane Birkin's bag, there were 5 key things feeding into that immense allure. First, it's provenance.
That's right.
Direct, single owner, straight from Jane Birkin herself.
Right.
That's huge.
Can't get better provenance than that.
Right. Second, its status as a prototype. It was the bag, the original blueprint, the one that started it all.
The Genesis piece.
Exactly. Third, and this is kind of paradoxical, it's visible wear. It wasn't seen as damaged. It was proof of authenticity, proof she'd actually used it.
Oh, interesting.
Fourth, its history. It had been auctioned before for AIDS research, adding this incredible layer of narrative gravitas, a story with meaning.
Okay.
And finally, just its undeniable media mythology, from Sex and the City all the way to TikTok. The Birkin is just, it's shorthand for status, instantly recognizable.
So if we connect that specific sale to the bigger picture, it really cemented a paradigm shift, didn't it? We're now in this age where, like you said, scarcity plus this new authentication tag plus global online markets, it's all fused together to monetize the story just as much as the physical item.
That's it.
And these luxury items now trade on really tangible financial factors. Their performance, like Knight Frank's index showing watches up 53% over 5 years, handbags 21%, which notably outpaced FTSE 100 dividends.
Yeah, right. And it's not just returns. Think about liquidity. You've got platforms now like The RealReal, where a Birkin can be listed in minutes and matched with buyers anywhere in the world.
That speed and reach is different.
Totally new, really. Plus, their returns often don't correlate with traditional stocks or bonds. So when the main markets get shaky, these can offer a different kind of stability for a portfolio.
It's still staggering for a handbag. But, okay, the big question for a lot of our listeners is probably going to be, how does this actually stack up against my 401k or gold? What are the real numbers when you compare them?
Well, the comparative data is pretty striking. If you look at 10-year total returns, handbags delivered about a 67% return. And crucially, with low volatility and, say, medium liquidity. Plus, what gets called a high emotional dividend.
Emotional dividend, meaning you enjoy owning it?
Exactly. The pleasure factor. Watches. Even more impressive over 10 years, 138% return. Again, low volatility, medium liquidity, high emotional dividend.
Okay, 138% for watches. How does that compare to, say, the S&P 500?
Well, the S&P 500 over the same period did have a higher return, around 215%. But moderate volatility, instant liquidity, and, let's be honest, a pretty low emotional dividend for most people.
Right, your stock certificate doesn't look great on your wrist.
Precisely. Gold was about 55% return, but high volatility. Classic cars, only 14% return, moderate volatility, and pretty low liquidity, harder to sell quickly. So what handbags and watches offer is this unique mix. Decent growth, low correlation to traditional assets, and what we call rich lifestyle utility.
Rich lifestyle utility.
Yeah, it's a key thing for modern investors, especially you folks who value experiences. It's an investment you can actually use and enjoy.
Okay, the numbers are definitely compelling. But what's the secret sauce? What makes one specific Rolex or Birkin an investment, while another is just a nice thing? What are those core attributes?
It really boils down to a few critical factors. First, and maybe most obviously, scarcity and rarity. This can be engineered, you know? Limited editions, discontinued models, those first ever prototypes like the Birkin we talked about.
So like Hermès limiting production.
Exactly. Hermès caps Birkin production. They reportedly even withhold color lists from boutiques sometimes. It creates this waiting list theater, which directly pumps up the resale market. Basic supply and demand amplified.
Right, engineered desire.
Yeah.
And the story matters, you said.
Absolutely critical. Second factor, provenance and history. This
Yeah.
is massive. Take Paul Newman's Rolex Daytona. It gains something like an 88,000% increase in value. Why? Because it was his.
Wow, 88,000%.
Yeah. Documentation, exhibition history, celebrity ownership, any of that can add zeros to the value. It's not just the object, it's the story embedded in it.
Okay, story and scarcity. And I assume it has to be the real deal and in good shape.
You got it. Third, condition and authenticity. Originality, especially unrestored originality, matters hugely. Think about collectible sneakers. If they're rated dead stock, brand new, never worn, original box on a platform like StockX, they can triple their retail price almost overnight.
Dead stock.
Okay. And crucially, technology is stepping in here. We now have things like blockchain-backed product passports. Consortia like Aura are encoding authenticity right from the start, at birth, basically.
Right.
That slashes the risk of counterfeits and really builds trust in the market.
That's a big deal for trust, definitely. What about the brand name itself? Is just having a famous logo enough?
Not just the logo, no. But brand heritage and prestige are definitely a factor. These century-old houses, Hermès, Rolex, Patek Philippe, they possess these deep narratives of craftsmanship, of cultural capital that newer brands just can't replicate overnight. That history builds desire.
Okay.
And finally, maybe the most profound point, cultural and emotional significance. This is key. We're moving beyond just commodities. These items are becoming, narratives that hold value.
Narratives that hold value. I like that.
They're not just things. We call them cultural assets luxury. They bridge your personal identity with financial investment. Think about it. A Birkin can symbolize female empowerment or success. A Rolex Daytona connects to motorsport history. A pair of Travis Scott Nikes embodies hip-hop culture.
Right.
That emotional resonance. It's not just fluff. It actually sustains demand, even when the economy takes a hit.
Okay, so Jane Birkin's bag, Paul Newman's Daytona, those are obviously peak examples. But it's not only about those icons, right? If this is sparking interest for you, our listener, what other categories should you maybe be looking at?
Definitely not just those two. There are several key categories showing real investment potential. High-end handbags, for sure. Beyond Birkin and Kelly, think Chanel classic flaps, the Dior saddlebag. These often see auction premiums way over boutique prices, sometimes more than double.
Global retail, wow.
Yeah. Then vintage watches. Flagship references the Rolex Daytona 6239, Patek Philippe Nautilus 5711, Audemars Piguet Royal Oak 5402. These can hit seven figures if the provenance and condition are perfect. Rolex Daytonas and Submariners in general are consistently strong performers in the vintage market.
Okay, watches and bags. What else?
Rare jewelry, especially fancy colored diamonds. Remember that 10.38 carat pink diamond? Sold for nearly $14 million. Signed pieces from legendary houses like JAR or Cartier also carry big premiums.
Right. Fine wines and spirits, too. The LiveX indices for wine showed like 146% growth over a decade. Rare whiskey dipped a bit in 2023, but it's still up something like 280% over 10 years. Massive long-term gains.
Wine and whiskey. Didn't expect that.
It's a big market. And limited edition sneakers. That market is just booming. Projected to hit, what, $6 billion in the U.S. alone by 2025? Nike and Adidas collabs especially often lead the charts for return on investment.
Sneakerheads knew it all along.
Seems like it. And lastly, art and design objects. Things like mid-century furniture, contemporary sculpture. They offer diversification, but you definitely need specialist knowledge there. It's a bit more complex.
Okay, quite a range then. So we know the what's and the why. But what's really accelerating this whole trend right now? What market forces are pushing it from a niche hobby into something bigger?
It's really a mix of modern tech infrastructure and shifting consumer attitudes. You've got these digital platforms, Sotheby's Metaverse, StockX, loads of others. They've just dramatically cut down the friction in buying and selling, made it global and easy, right? Easier access.
Yeah. And at the same time, AI-powered authentication is getting really good at spotting fakes, which builds crucial confidence. We're also seeing the rise of fractional ownership platforms.
Fractional ownership, so you can buy just a piece of a super expensive watch.
Exactly. It democratizes access,
Hmm.
lets more people invest in these high-value items without needing, millions up front. Opens the door.
That's a potential game changer. And who's doing the buying? Is it the same crowd?
Not entirely. A really crucial factor is the new demographics coming in, especially Gen Z collectors. Get this. Something like 94% of Gen Z apparently buy collectibles. They're hugely fueling the growth in luxury resale.
94%, wow.
Yeah. And their priorities really align with this whole trend. They care about sustainability, they're digitally native, and they want that emotional connection with their investments.
Makes sense.
And then there's just global demand. Pricing is efficient across borders now. A Himalayan Birkin, for instance, it'll fetch a higher price in Hong Kong than in Paris. It's a truly globalized market. Oh, and it's worth mentioning again, in 2024, handbags were basically the only standout among these passion assets. They showed modest gains while others kind of slumped.
So resilience even in a downturn. Interesting. But this isn't just about the numbers on a spreadsheet. You mentioned earlier heirloom with dividends. Can you expand on that sort of personal side?
Yeah, absolutely. That's a huge part of the appeal. Owning, say, a Patek Philippe watch isn't just about hoping its value goes up. It's about the heritage. It's about personal identity, craftsmanship. It really is like an heirloom that also happens to potentially offer a financial return, something you can wear, enjoy, and maybe pass down.
So collectors are building a narrative.
Exactly. They're curating narratives, not just piling up possessions. They're building a collection that reflects who they are, their interests, their story.
Okay, so if you're thinking about this, what's the practical advice?
Well, that leads to a couple of key points. First, think curation versus accumulation. Having a focused theme, maybe you only collect first edition Air Jordan 1s or watches from a specific era, that tends to perform better than just buying randomly.
Why is that?
Because depth signals authority. It shows future buyers you really understand that specific niche. It builds credibility.
Got it. Focus matters.
What else? Then there's the absolutely critical importance of preservation and maintenance. We're talking about proper storage, climate-controlled vaults for bags, inert watch winders for automatic timepieces, archival tissue paper, anything to slow down entropy, the natural decay over time.
Keep it pristine.
Mostly. But here's a nuance. Professional servicing is important, but it should never overwrite the natural patina that actually proves an item's age and authenticity. Sometimes that wear is part of the value story.
Ah, right. Like the Birkin bag. That's
Yeah.
a tricky balance. So how do you protect these valuable things once you have them?
Yeah, and that brings us to the last point. Insurance and storage. It's non-negotiable, really. You need specialist high-value collections insurance. It offers things like agreed value cover, so you know exactly what you'll get if the worst happens. Plus, protection during transit worldwide, and even defective title indemnity.
Defective title, meaning if someone disputes, you actually own it.
Exactly. Protection against ownership disputes. Premiums usually run somewhere between, say, 0.3% to 0.8% of the item's declared value annually. A small price for serious peace of mind.
Makes sense. Okay, looking forward then. What's the future looking like for luxury collectibles? And importantly for our listeners, what are the risks? What should you be careful about?
The future looks pretty robust, actually, driven by a few key trends that seem likely to continue. One is sustainability and ethical sourcing. The whole resale market inherently extends the life of products, which aligns really well with growing ESG demands, those environmental, social governance standards.
So buying vintage is seen as more sustainable.
Exactly. Then there's blockchain authentication. Using NFTs as digital twins for physical items will keep growing, boosting buyer confidence, like a digital passport. Though, there's a small caveat there. If it's not done thoughtfully, tying an object too closely to current tech trends might, paradoxically, make it feel less timeless down the road. Something to watch.
Interesting point.
And fundamentally, enduring scarcity. As luxury houses keep production tight and maybe certain natural resources become rarer, the value of truly scarce, high-quality items should continue to appreciate.
Okay, sounds positive. But you mentioned risks earlier. Let's play devil's advocate. What are the real downsides or pitfalls people need to be aware of? It can't all be smooth sailing.
No, absolutely not. It's crucial to acknowledge the risks and the volatility. The Knight Frank Luxury Investment Index did report a dip, about 3.3% in 2024 overall. That's a clear reminder that task cycles change, and big economic shocks definitely impact these markets too.
So they can go down.
They can. However, it's worth noting that collectibles under, say, 100,000 euros, and those real blue chip items tend to be more resilient. And like we said, handbags actually bucked the trend and gained value during that dip.
Right.
But the core message is the same as with any investment. Diversification is key, and you really need a long-term perspective. Don't expect quick flips. Liquidity can still be a risk for some niche items. They might be hard to sell quickly when you want to. And authenticity, despite tech advances, always requires diligence.
So careful research is paramount.
Absolutely. Careful research, understanding provenance, and leveraging those new digital authentication tools can significantly mitigate those risks.
Okay. So pulling this all together, what does this mean for you listening right now? It feels like this world of luxury collectibles has really grown up, doesn't it? It's way more than just fancy accessories now.
That's the perfect summary. Our deep dive really shows these items are now legitimate, high-end asset classes. They offer this expert blend of, cultural fulfillment, the joy of owning something beautiful and storied alongside credible financial returns. So whether you're thinking about investing purely for passion or genuinely for portfolio balance, our analysis here at the Urban Herald points to the same thing. Disciplined research, absolutely airtight provenance, and meticulous care. Those are your best hedges in this really fascinating market.
And as that authentication tech gets even stronger, and as new generations, particularly younger collectors, keep entering the market, the whole center of gravity seems to be shifting, doesn't it? It feels like it's moving away from just how an item looks towards becoming about these cultural assets, luxury things that don't just sit there, but actively tell stories, hold value, and yeah, sometimes completely rewrite auction history. So the question for you is, what stories might you be curating for your future?